Good morning, Jags. This is Fahad. Today is Tuesday, June 2nd. And good morning, gang. How's everyone doing?
Doing good.
Doing good,
All right.
Fahad. How are you doing?
Just doing fine. Everything is good. Okay, so I'm gonna for today, I'm gonna focus on couple technical setups. We have already discussed these in various settings, either in chat room recently or just in various discussions and webinars as well as in Telegram. And these setups are something to keep in mind because some of them are catalyst driven and some of them are simply going to be setups based on improving fundamental trends if we have noticed and whatnot. So the first one that is comes to mind is Wynn Resorts. Now we did discuss this yesterday in the chat room. So many are familiar with this. So just to quickly point out, the stock is at 86.47. That's where it closed yesterday. But looking at pre-market, this is going to open slightly higher, not significantly, only about, flat to actually, just as I start. Let's see. Let's see if there's news on this one. But this is going to open mostly flat, essentially. But if you look at this chart, this is potential setup for a breakout into the gap. And the gap is open all the way to $103 per share. A different way of looking at it is to simply focus on the Bollinger Bands, which is one of our favorite setups. Now, Bollinger Bands can break out or break down in either direction, and whenever that move comes, it tends to be quite strong, so something to keep in mind. But if it does start to take out this $90 decisively on high volume, there is potentially as much as 10 to 15% to the upside coming. On the other hand, be mindful that a breakdown below $80 per share, which would be a lower low from Friday, would negate this entire technical trend, and then this chart could be in trouble. A lot of this breakout is around potential the reopening plan that will be announced by Las Vegas casinos to the Nevada Gaming Board, and the deadline for that is June 4th. What's supposed to happen here is that they're going to propose the plan, then it has to be approved by the board as well as the governor in of Nevada. And then if they're given the green signal, then the reopenings will begin sometime in the week after. And if such happens, then we could see improving traffics in all of them. Having no business is better, having some business is better than having no business, which is essentially the case. Now, this is purely catalyst driven. So I'm watching a potential move above 90 to play with short-term calls, or if a breakdown happens below $80 per share, which is really the Friday low, then it will negate this technical setup. So this is one of them. The second one I'm watching is DPZ, which is continuation of more upside to come. That's Domino's Pizza. We have discussed this multiple times already. The stock is setting up for a more upside in my view. This is a very large, cup and handle formation after multiple attempts. The important thing yesterday and day before yesterday was, Friday, the volume was elevated as the stock was attempting to break out. So I think that this is a successful breakout attempt. I don't think it's going to fail here, even though yesterday it faded a little bit. Important thing is that it may have a bull flag formation over here before we see $400 plus. So there is that. Next one I'm watching is one of Juan's favorite that he asked about yesterday as well, which is Kimberly Clark, KMB. Now this too has come up to the resistance. A better look would be right over here. $144 per share would potentially lead to a breakout that takes the stock to about 150. This is also a big cup and handle formation with the MACD and RSI bull crosses coming our way. So this is the spot where it has failed multiple times. And so we need to see whether it's going to, this time it's going to lead to the breakout. The only thing that I like about this chart at this time as it comes up to this resistance is decent volume in the MACD and RSI bull cross after they have neutralized, which gives me some comfort that this is going to potentially lead to more upside, but 144 is the key. Another one that I'm watching is where's that one? Is this one, QTS, which Jay discussed a fantastic bull case in homepage yesterday, and a very crystal clear chart over here. Okay, and there is a little bit of a strength that we have noticed in the entire digital REIT space recently. We saw, for example, DLR was starting to recover quite strongly on decent volume after retesting $130 VOP support level. It came up to the downtrending resistance. We also issued the bullish trade idea on core site realty with this has started to break out, but then as soon as it broke out after multi-year formation, we saw the company did a secondary share offering for a large holder in the company, and that's what essentially pushed it back a little bit. So there's a relative strength in this one as well. And now QTS is another one to watch. Let's see, above $68 or $69 per share, I think this could get into 70s. And then lastly, Chewy, which is also one of our favorite names. This thing also has come up to resistance in recent days. Volume is light, but we do have the MACD and the RSI bull crosses. So let's see how this will react from here. I was just reading a couple of days ago, the forward thinking on this one coming out from various analysts that continue to discuss the animal health category with strong channel checks continuing, as well as the e-commerce trends in favor of Chewy. And so all of that still plays bullish. Now the stock has had a good time to pull back, correct itself after very, very strong earnings, and then form a base and then start to lift higher again with the MACD and RSI bull cross. I think if this starts to clear around $46 per share, then I think this will get to about 50. So these are the technical setups that I have in my mind today. There are a few others that we also discussed, but I think many are familiar with. So for example, Budweiser, Anheuser-Busch, essentially, this is going to start to clear $50 resistance, but we're already positioned into this one as well. Everybody is already long call options in September. There's an air pocket up to $56 if it starts to clear. And so that's another one that I'm watching. These are the high quality setups that I have on my watch list for now. Avo, what do you have?
Sticking with about the same theme about reopenings and more travel. I'm looking at airline stocks, and Spirit Airlines, SAVE is the ticker on that, comes to mind because it's one of the lower fare offerings. Now, it's not the best of the breed. I think Allegiant has a far better cash position going forward, but that has run a little bit more in its course. It's not the only one. There's also Southwest, which we've mentioned in the chat room a few times, and I think you also mentioned a little bit on the webinar. And that's it for me.
Yeah, you know, the some of these airlines, the ones that are more domestic focused, I think
exactly, yes.
So, by the way, Spirit Airlines is one of the worst domestic airlines, just my personal view on that one. But nevertheless, it's a low cost carrier, so maybe people are trading down. Southwest would still be my favorite, but here's the way I would read this chart too, because notice a tremendous amount of accumulation that is taking place looking at those volumes down here. Now, what's happening with a lot of these airlines is that when they crashed in the last couple of weeks, many of them have raised tremendous amount of cash on the balance sheet, either by doing secondary share offering or by taking government bailouts or by doing bond offering. Cruise ships have done exactly the same thing. So they basically bought themselves a lifeline by boosting the balance sheets. Now, on top of it, if the TSA checkpoint throughput continues to improve, which we have been seeing in the domestic trends, then yes, there's reason to believe, especially the domestic ones, that these stocks should appreciate from here. But just keep in mind, this is not driven by a prospect of recovery back to normal. That's going to be a long time to come, but more technical setups in short term.
And also, you're right. I don't expect travel to get back to 2 million passengers a day anytime soon, but we're sitting around 350-ish, 350,000 a day. Even a bump to 500 or $550,000, that's still an appreciable amount. And that's another basis that I was looking at, which thank you for bringing that up. It is the increased passenger screening data that we're seeing. And also looking at some other countries, we've also seen increases like in China, a little bit in Italy, not too much, because they're still pretty locked down intra-European travel is still locked down, but they're starting to open up as well. And Spirit is more domestic, although they do fly to South America. And other ones, I mean, frankly, it's a little bit of putting your money wherever you want. You can also go with Hawaiian Airlines, Alaska Air, which also are more domestic, versus the big ones, that Delta, American, which have a lot of international, which I don't think is going to come back by any force this year, anytime.
Yeah. When the normal TSA checkpoint throughput before COVID was about 2.5 to 3 million.
Yeah, depending on the travel,
right.
it's about 2.5-ish, let's say.
And then it crashed to below like 150,000 or something. Like it was down like
Actually,
90.
87,000 at a point. Yeah,
And
that
now
was
we're
the
at,
low.
and then last time I checked, it was 300 some thousand. Where are we now?
About
400,000?
350. Yeah, well, I mean, it varies during the day, but let's say about 325-ish.
So, I mean, this is still down like some 85%. And I think people are more traveling by simply cars instead of actually flying. I think that's also playing the factor here to avoid large crowds and gathering. Nevertheless, it is an improvement. I mean, that's how you can either see a glass full or a glass empty, because one argument would be that TSA checkpoint throughput is down 85% still, but the other one would be, yeah, but it's up 100% from the bottom in March, right? And so we'll see. But I think from pure technical standpoints, I think one has to acknowledge that the price is definitely better on a lot of these stocks. And secondly, the call option activity has been quite strong for a couple of weeks. And lastly, fundamentally, they have raised a lot of capital to boost their balance sheet liquidity.
True, and I'm also thinking that people are still doing what they did before. They're looking for the cheapest fares, and
Yeah.
usually the low-cost airlines like Spirit have cheaper fares. And if it makes a difference, this is an all Airbus fleet, but I think that Boeing issue is largely gone. I don't even think it's a factor into anything anymore.
Jay, what's up, buddy?
What's going on? So today I have an update on Schrodinger. SDGR is the ticker.
Yeah.
So we first covered this in Weekend Research back on April 26th. It's done quite well. BMO Capital.
I
Yeah,
have to say this is one very volatile stock, man. I
yeah,
mean, I
it
own
is.
this. This thing moves like 10%, 5% a day like it's nothing.
So BMO Capital is out today raising their price target to 85 from 67. They hosted some management meetings, and some of the takeaways were that Schrodinger said that they have been seeing signs of greater customer interaction and interest in their software platform. Now, for those that do not know, the company is a drug discovery and development company that has its largest segment is its software, where it essentially can reduce the time, the cost, but increase the quality of drug design. So they're seeing signs of greater customer interaction. They're seeing increased live design use, an increased number of supported tickets, greater demand for online molecular modeling courses. Now, BMO notes that none of these right now are revenue generating, but it still continues to indicate the growing interest in the company's software. They talked about how COVID-19 really drove this interest. As they said, the broad move to remote work favored computational versus physical activities. And the company, as far as their software, they're investing in a handful of different initiatives, including predicting protein structures and improving biologic drug design. And apparently they expect biologics to be an equal contributor to their platform, as they recently signed an agreement with AstraZeneca and Twist Biosciences. So these are just steps in the right direction.
Fantastic stuff. I love hearing that because naturally I'm long the stock. I think it's going to be a big winner. You remember when you first published that note, I immediately pinged you. I'm like, this
Yep.
is really good stuff. I think the company has bright future. You know, valuations scare me time to time a little bit, but that's something that can be said about basically any stock, is particularly in the software category these days. But I think this is a very uniquely positioned company that is cornering a market to itself within the biotech sector as a SaaS. And it's going with all of these product announcements that you just talked about, it's going to continue to improve that moat over the year. So for those who do not know, from April 26, where Jay presented this bullish case on Schrodinger, I think it's worth taking a look again if you have not. Great stuff. Anything else?
Nope, that's it.
Okay, Chronicle, what's up?
Starting to brainstorm for the next quarterly outlook. This is regarding yesterday's ISM. So whenever the ISM comes out, I like to tabulate which sub-industries are doing well, which ones are struggling, and more importantly, it also helps me identify possible turning points and trend reversals. So if we look at this first chart that I shared in the chat, this table, which I update every month, basically summarizes which industries are in expansion and which are in contraction. I find this really useful for generating long and short ideas, especially when it comes to making relative bets. But anyway, from yesterday's report, I've singled out 2 industries that I think are outperforming and 3 that I think are underperforming. And I think a couple of them are quite surprising here. So first, let's look at the outperforming industries in the next chart that I shared, which are the apparel, paper, and wood industries. Especially for the paper industry, we can see that it has held up pretty well in the second table.
Okay, this one? No.
Yes.
Okay.
Yes, this one.
Okay.
We can see the paper industry has held up pretty well over the last couple months, without a doubt driven by e-commerce. But I think apparel here is quite surprising because we can see that it did not contract in April. Like for the most part, new orders and production stayed the same, while almost every other industry experienced contractions. So contrary to what a lot of macro guys are saying about the consumer discretionary sector, I think this particular industry might be starting to get over the hump after a very difficult 2019. And I do have an idea for the quarterly outlook within this space. Lastly, I included wood here because even though it's not that much of an outperformer, I remember us bringing up Louisiana Pacific last week.
Yeah.
So according to this table, I think whether or not the wood industry will see a solid expansion from here is still more or less a coin toss. And given that the stock is currently at major resistance, I think we're going to see a pullback at some point.
The only one question on the apparel side, the only feedback that I would have there, I don't know exactly which pick or which idea that you're working on, but my preference would be to continue to focus on the apparel category, which is actually benefiting from e-commerce trends, because first COVID related shutdowns and now protests, it's very, very hard to see if we go for brick and mortar that has very large revenue coming from brick and mortar, if it's going to be able to outperform at all once the second quarter earnings reports start to come out.
Agreed. It's this idea is not brick and mortar.
Okay, good.
So if we move on looking at the underperformers in the other image that I shared, the one that immediately stands out is transportation equipment. And I stress this is equipment, not transportation itself. So we're talking about components and engine suppliers like Greenbrier and Cummins, rather than actual transportation companies like UPS or CSX. And so we can see for transportation equipment, apart from new export orders expanding in February, it's just been hell for the industry for almost a year now. And so if these companies continue to rip higher into earnings while continuing to report contractions, I'm actually tempted to buy some diagonal put spreads right before the next report. Next, primary metals is also beginning to struggle after a short period of green shoots, which is why I continue to be bearish on basic miners. This is not a big secret. Even the street estimates have been coming down for a lot of these miners, and I believe at some point share prices for a lot of these guys will have to correct, especially iron ore. I think once Brazilian production starts to come back online after COVID-19, we'll probably start seeing iron ore prices start to come back down. And lastly, this is very surprising, but I'm now becoming cautious about computers and electronics, which includes the semiconductors. I'm not saying I'm going to short these companies, but I'm not going to be long them either for now, because with regards to new orders and production, we are now seeing these 2 consecutive months of sequential contraction here. Like if I want to be bullish semis, this is not the kind of checks I want to be seeing. And when I look at the latest sell side notes on Micron, they don't look very confident about the back half of the year. And additionally, when we look at the outperformance from the May quarter earnings, it was mostly driven by pricing rather than unit demand. So I'm quite wary about this space right now.
Yeah, and we discussed this in webinar last week too, particularly related to Micron and semis environment in general. On one hand, Micron comes out and raises guidance, although not for the entire year, but just for the current quarter that they are in. And they see better outlook and all of that, particularly related to improving DRAM and NAND pricing trends. And then the very next day, Citigroup comes out, slashes the guidance across all of these computer hardware components makers simply on the basis they believe that the hyperscalers, which includes Amazon, Google, and Microsoft, are cutting back on their CapEx plans because and we saw a little bit anecdotal evidence of that, I have to say, in the last earnings report from Amazon as well, where I love to dissect Amazon earnings report to the finest detail I can so I can get a bigger picture because it touches on so many industries and so many points. You can learn so much about what's going on in other industries by simply spending a lot of time dissecting the Amazon earnings report. And I was quite surprised when their AWS revenues, although in absolute basis they were pretty strong, but they did not completely blow the expectations out, and the commentary suggested soft patches here and there, which led me to believe to the same conclusion, which is some of the other analysts have been talking about, that there is going to be a potential new downturn cycle coming in semis, especially in an environment where the inventory levels in semis is now once again above the normalized trends that we see. I think it's extended by more than 10 weeks, and inventory corrections in semis generally lead to ASP corrections, and that leads to guidance cuts. And who knows, that may be coming in the third quarter and the fourth quarter. So these are the evidences that continue to come in front of us. And this chart that you have here, the middle part of this it seems to be suggesting the same thing. So we just need to be mindful of that. Any more to add on this one? You sent me one more chart. Is that for this? The unrest?
Oh no, that has nothing to do with
Okay, sounds good. All right, folks. Thank you everybody for joining. So the market is going to do what it's going to do, despite the protests, despite shutdowns and everything. But the important thing is that there are technical setups out there, and those technical setups can be played for short-term breakouts and breakdowns based on news flow. And so that's what we are focusing on, while watching clearly what's happening in the broader economy. That's it from me and the gang. We'll see you in the chat room shortly.